Good morning, you're watching Market Cafe with me Shreyansi Singh and Snehisha on ET Now, and over the next 1 hour we'll take you through news and updates from within the country as well as across the globe. Good morning, Snehi.
Good morning, Shreyansi.
So US markets were definitely shut yesterday, but
Absolutely.
What kind of handover are you seeing in terms of what kind of market action we could expect in terms of the futures action?
Well, absolutely. So good morning to you and good morning to all our viewers as well. Well, obviously the markets were shut yesterday, US markets that is. So let's talk about what the futures move look like. And stock futures were lower on Monday night as Wall Street awaits further data and bank earnings that will provide a better glimpse into the state of the American consumer. Now, futures tied to the Dow Jones Industrial Average lost about 50 points or just 0.1%. S&P 500 futures also dipped more than 0.1%, but not much. And Nasdaq futures shed 0.2%. So well, rather flat moves when it comes to stock future moves, but not much happening over there. But investors are looking ahead to December retail sales data, which will be out on Wednesday, which could fuel recessionary fears and concerns about economic growth if the US consumer spending sees a cool down. Now, economists polled by FactSet anticipate an increase of 0.2% for the month, slightly under that 0.3% increase that we did see coming in November. Now, another batch of bank earnings will also be out during this holiday shortened week, providing further clues about consumer health and data on credit card payments as well as delinquencies. Goldman Sachs, Morgan Stanley and PNC Financial Services are set to report on Tuesday their Q4 results as well, and stocks are coming down from a series of weekly gains. Let's talk about some weekly action that we did see coming in last week, notching their 10th winning week in 11 weeks. Despite a hotter than expected December consumer inflation report, the stocks held on pretty well despite that. The negative producer price index print had further convinced investors that the Federal Reserve's rate cutting campaign could begin soon. So hints over there as well. And last week, the tech stocks led the market higher. Nasdaq outperformed, adding about 3.1% for the entire week last week through Friday's close. Dow gained roughly just 0.3%. S&P 500 advanced 1.8% for the week that went by. So well, Shreyansi, that's what the US handover is looking like. Absolutely not yesterday, but Friday, the markets were working and stock futures not indicating much action happening anyway. But what's happening with the world of crude?
Absolutely. So when you look at oil prices, we're seeing a lot of volatility come in, especially on an intraday basis. So when you look at oil prices yesterday, they slipped with traders watching out for supply disruption risk in the Middle East following strikes by US as well as British forces to stop Houthi militia in Yemen from attacking ships in the Red Sea. So when you look at Brent crude futures, you're seeing a downtick coming in of about 0.4%. And this was after settling up 1.1% on Friday. And when you look at WTI as well, you're seeing a downtick coming in of about 0.4%, following a near 1% gain in the previous session, that is Friday. So the benchmarks jumped more than 2% last week to touch their highest intraday levels this year after US and British forces launched dozens of airstrikes against Houthi forces in retaliation for months of attacks on Red Sea shipping that the Iran-backed fighters cast as a response to war in Gaza. And when you look at what's happening in Libya as well, people protesting against perceived corruption threatened to shut down 2 more oil and gas facilities after shutting the 300,000 barrel per day Sharara field on January 7th. So that's largely what is happening with regard to oil prices. But when you look at gold as well, that edged up on Monday, holding above that 2050 level on safe haven appeal from elevated tensions in the Middle East that we just talked about, as well as renewed bets for an early rate cut by the US Federal Reserve. Now, in the run-up to the Fed's January 30th to 31st meeting, things do look reasonably constructive for gold. So that's largely the handover that we're seeing for oil as well as gold.
Well, absolutely. With that, let's also take a look at all the important cues that you need to be keeping on your radar for today's trading session. And let's start by looking at results. Well, because we've kickstarted the Q3 earnings results. And from the Nifty companies, you've got HDFC Bank today that will be declaring its numbers today. Come tomorrow, you've got 2 Nifty companies, LTI Mindtree as well as Asian Paints. On the 18th Jan, you've got IndusInd Bank, and on 19th Jan, Ultratech Cement as well as HUL. Now, shifting focus back to today, then among the non-Nifty pack, you've got ICICI Securities, L&T Tech, ICICI Lombard, Jindal Saw, Federal Bank as well as Mufti Menswear. So 2 new companies that were recently listed on the bourses will also be declaring their numbers today. And when we shift to some corporate action, then you've got Spandana Spurti. This will be in focus because the board will be meeting today to mull fundraising, and the same can be said for Just Engineering as well. Both these counters will be in focus. And in some other corporate action news, then Dhampur Sugar, well, that counter is the one to watch out for today, because today is the last day to be eligible for that buyback issue that the company has come out with. Now shifting focus to the primary markets, then Jyoti CNC Automation will be making its debut on the bourses today. Let's see how that one lists. And when it comes to other events, then you've got the EU Economic and Financial Affairs Council meeting in Brussels today, so we'll be watching out for that commentary as well, Shansi.
Absolutely, and another thing that was in focus was of course the World Economic Forum Summit. And with the back to basics approach, the 54th World Economic Forum kickstarts the 5-day event. Let's get you a quick run through of all that transpired on day one. According to the World Economic Forum's latest survey of chief economists, global economic outlook is fraught with uncertainty. Some 56% of the economists questioned said that they expect the global economy to weaken in 2024. In this report, about 87% expect recent geopolitical developments to stoke economic volatility over the next 3 years. With that, let's shift focus to the corporate elite that's in snow-clad Davos. So you did have the budget furniture retailer IKEA that said that the company is sticking to its planned price cuts despite the Red Sea crisis. It is also considering India as a production hub for exports. Staying with the Red Sea crisis, then Swiss engineering group ABB says that it is seeing limited impact from the disruptions on its supply, calling India a key market, followed by US as well as China. And when you look at global delivery giant FedEx as well, they held a similar stance and added that they haven't seen much of a shift to air freight due to disruptions in the Red Sea that have gone on for nearly 2 weeks to shipping transit times as well. Meanwhile, let's also center focus on some significant voices from back home. The Bajaj Finserv CEO Sanjeev Bajaj, however, said that it will be another 5 years of a majority government in India that could usher in a flood of foreign direct investments. So that largely is the handover coming in from day one of Davos.
Well, lots of action happening at Davos, but let's stay with Davos because the IMF head Kristalina Georgieva sounds an alarm for the Chinese economy, emphasizing on the need for structural reforms in order to avoid a decline rate in growth rates. She added that the country is faced with both short-term and long-term challenges, and over the short term, she believes the country's property sector needs fixing, while she noted that demographic changes and a loss of confidence over the long term.
Shifting focus then, the Chinese central bank has held key interest rates as concerns flare up about yuan's volatility. A distant yet very real prospect of the Fed easing continues to impact decisions across central banks. The PBOC maintained the rate on its one-year policy loans, disappointing investors expecting the first trim since August.
Well, and shifting focus to Japan, Japan's wholesale inflation came in flat for the month of December, underscoring Bank of Japan's view that cost push pressures from rising raw material prices will steadily dissipate.
Well, with this, we're timed out on this segment, but we'll see you with more news and updates on the other side.
Hi there, welcome back and thanks so much for staying tuned to Market Cafe. This is ET Now. Let's take a look at how the Asian markets have opened up this morning, and well, they've largely fallen this Tuesday morning because all across my screen, all I'm seeing is red. Even the Japanese stocks, which have been on a record-breaking rally since the start of the year, have slipped as we speak, down 0.5%, a 188-point cut coming in for Nikkei. Nikkei fell 0.4% in the morning. It continues to fall after that as well. This came in after Japan's corporate goods price index came in flat on a year-on-year basis compared to that 0.3% fall that was expected by economists in a Reuters poll. Now, the country's benchmark Nikkei has hit key milestones of 34,000, 35,000, also touching 36,000 and back. Now, these are levels that the index has not seen since 1990. So, after a very high and very rapid uptick that Nikkei saw, it's cooling off down 0.5% as we speak. And shifting focus, let's talk about Australia. In Australia, the ASX 200 is on pace for a third straight day of losses, fell 1% on open, is right there as we speak. Still a 1% downtick coming in for Australia as well. South Korea's Kospi then declined 0.8% on open. It's still right there, 0.8% down in the red. That's Kospi for you. And shifting focus, let's also talk about Hang Seng and Shanghai. Both of these indices not doing much. Hang Seng down 0.2% and Shanghai also will be up on your screen. Shanghai, the one in the green right now, nominally has just managed to slip into the green, holding onto the green by the skin of its teeth. But let's see if it continues to be in the green for the rest of the day as well. Now, when we talk about stock futures for the US markets, well, markets were closed yesterday due to Martin Luther King holiday, but futures are indicating that the three main indices are likely to fall when market resumes trading. And shifting focus back home, then some positivity at least coming in from the Indian markets, because yesterday we hit a fresh new record high. We've been doing that over the course of the last entire week. We managed to close just under 22,100 at 22.97, implied open at 22,092, so indicating a flat start, not indicating much. So well, let's see how that pans out for us, Shansi.
Absolutely, and we also have a jam-packed lineup for the market. At 9:20, we'd be in conversation with Vineet Samre, who's the head equities at DSP-MF, to talk about the markets and more. At 9:30, we'd also be in conversation with Amit Agarwal, the Group CFO at Raymond, to talk about the growth roadmap for the company. And to track the rise of religious tourism at 9:40, we'd be in conversation with Suma Venkatesh, Executive VP Real Estate and Development at IHCL. To talk about the order win pipeline for NLC India, we'd be in conversation with Prasanna Kumar Muthupalli at 9:50 am. And to talk about the listing of the day at 10:05 am, we'd be in conversation with Parakram Singh Jadeja, CMD at Jyoti CNC Automation. So really a power-packed lineup there for the market.
Well, important market voices and a whole host of managements that have been in the buzz as of now. So that's the pipeline for you today. But
welcome back. Thank you so much for staying tuned in. Let's take a closer look at some data coming in then. And data shows that Indian bonds under the fully accessible route received the bulk of flows late last year, with foreign holdings in them more than doubling from a year ago period. Now, after JP Morgan's decision to add Indian bonds to its indices has pumped up inflows to a 6-year high, how attractive are Indian bonds now, and what will rate cuts by the Fed as well as followed soon perhaps by the RBI make them later this year when this happens? So in December, India's trade deficit narrowed to $19.8 billion, down from $20.6 billion in November. And this improvement is attributed to a 1% rise in exports, reaching $38.45 billion. While when you look at imports, there was a downtick of about 4.9% coming in for imports to $58.25 billion. So that's largely the data coming in on that front.
well, that's the data coming in on December trade snapshot, looking rather positive. But let's also get a move on and talk about the RBI, because RBI has issued a draft circular that seeks to harmonize regulations of housing finance companies with that of non-banking finance companies. My colleague Ankur Mishra has more details on this. Ankur, over to you.
Yes, NBFC, HFCs, that is housing finance companies, have a little different regulation if you compare it with NBFCs, and now Reserve Bank of India plans to harmonize both of them so that HFCs come closer to NBFCs. Now for that there has been certain directions from Reserve Bank of India, and it has been proposed that deposit taking HFCs should maintain 15% of liquid assets for taking public deposits, and this was 13% earlier. Now for NBFCs, this level is 15%, and Reserve Bank of India has prescribed the same level for housing finance companies. Also, housing finance companies needs to have full asset cover that is available for public deposits, and what happens if it falls below that threshold? They have to inform National Housing Bank for that, and if it is short of that liability, that needs to be immediately informed to the regulator. Apart from that, deposit taking housing finance companies should also maintain minimum investment grade rating for at least 1 year for continuing to take deposits, otherwise they will have to stop that. Apart from that, public deposits accepted or renewed by HFCs shall be repayable by 1 year or maximum 5 years as far as these draft guidelines are concerned. Now, it will all depend what kind of comments Reserve Bank of India receives, and finally, you will see these draft norms taking the shape of final regulation.
Well, absolutely. Thank you so much for that snapshot, Ankur. Let's also take a look at LIC housing, and that particular counter is emerging on brokerage radar as well. Macquarie has a view on it, and they're maintaining an outperform with a target of 650 rupees. Now, they're saying that RBI announced 3 main changes, and they're seeing LIC housing meeting all these revised parameters. So, with this in mind, Macquarie is seeing LIC housing with a compelling valuation, and they're seeing it emerging as their top NBFC pick. So let's see how investors also pass through this particular bullish note on LIC housing.
Well, all right, that stock will be in focus today on the back of this brokerage note. But let's again shift focus to the RBI, because RBI has released its draft framework for self-regulation organizations. For fintech companies, SRO is an NGO that sets monitoring standards for industry players and works as a bridge between the industry and the regulator. Let's once again go across to my colleague Ankur Mishra, who's here with more details. Ankur, we're back to you.
Yes, definitely. Reserve Bank of India has proposed now a self-regulatory organization or organizations for the fintech sector. Now, this has been done as part of digital lending guidelines. Remember, it was proposed as SRO, but finally this never came into place. And now Reserve Bank of India has released a draft guidelines on SRO FT. Now, what will this SRO fintech sector do? Now they will have an objective of framing certain rules, a well-defined and consultative process, and also maintaining the Reserve Bank of India's standards as well as enforcing them. They also have to put a code of conduct for its members, and also will be responsible for advertisements, marketings. All that will be regulated by SROs. Apart from that, to develop a baseline governance standard will also be the responsibility of this self-regulatory organization, and will have to formulate a framework that guides oversight and enforcement of Reserve Bank of India. So all in all, Reserve Bank of India wants that industry themselves should enforce these ideas rather than only one way of controlling by the regulator, and hence a proposal has been floated for SRO for fintech sector.
Well, thanks, Ankur. Looks like there's a lot for you to track this morning. But onto an ET Now exclusive now. The government may announce the extension of FAME 2 scheme in the interim budget. ET Now has learned from sources that Finance Ministry is actively considering the proposal of the Heavy Industry Ministry to extend FAME 2 benefits beyond March 31st. Prakash Priyadarshi has more details.
We are learning from our sources that the government is likely to extend FAME 2 scheme in the interim budget. Sources are informing that the existing scheme would be extended till formulation of a new scheme which is under process. We're given to understand that the Ministry of Heavy Industry is under process to finalize a new scheme. The process is on, consultation process is underway, but the scheme has not been finalized yet. Therefore, Ministry has requested Ministry of Finance to extend the existing scheme which is in effect till 31st March 2024 till the process for formulation of a new scheme gets over. We also given to understand that the government has spent around rupees 5,300 crores so far under FAME 2 to provide financial support to the domestic EV manufacturers. Along with that, world marketing companies are also entitled to get financial support under existing scheme to set up 7,500 EV charging stations in the country. We are given to understand that various other aspects are also being taken into consideration by the government before finalizing the new scheme which is under process, and industry would be given more financial support going forward. The government is moving ahead with the FAME scheme in order to provide financial support to the domestic EV manufacturers in order to boost domestic EV sector in the country. Along with that, government has also set a target to cut down carbon emission by 50% till 2030, and FAME scheme is playing a very crucial role.
All right, Prakash, thanks for all of those exclusive details. Let's jump from one exclusive to another and let's keep it with this budget cover because the government is likely to increase the defense sector outlay by 5 to 10% in the upcoming interim budget with a special focus on exports, R&D and Make in India schemes. A special scheme for boosting technology for military drones may be announced as well, so we'll be keeping our eye out on that. And Sumit Chaturvedi, my colleague, is joining in with all of these exclusive details. Sumit, over to you.
India is one of the top 3 military spenders globally, and to keep up with the pace, especially in a complex geopolitical environment, sources have told us India is going to increase budget outlay once more. It can be increased between 5 to 10%. Well, in 22-23, the budget outlay was around 5.9 lakh crore rupees, out of which 1.6 lakh crore rupees was capital expenditure. But now it's going to increase this year as well, though it's an interim budget. The focus of area are going to be R&D, also Make in India and defense PSUs. They all are going to be. Sources also told us that some scheme could be announced for military stage drones. So keeping all that in mind, clearly defense is a very important sector and no budget would be left without spending, increasing the spending, especially after many tensions that have arisen around the borders of India over the last few years.
Well, thanks, Sumit, for those exclusive details. But with this, we're timed out on this segment. We'll see you with more stock-specific news on the other side.
Hi there, welcome back and thanks so much for staying tuned to Market Cafe. You're watching ET now. Now let's shift to some stock-specific action then. And for the first time ever, Geo Financial Services has revealed its holding company structure with stake in each of the entities. Now this after announcing its third quarter results and holding a con call as well. My colleague Vamakshi is in to get us all of the highlights of this call and a snapshot on the results. Vamakshi, good morning. Take it away.
Well, yes, Geo Financial Services is the stock that will be in focus today, and that is because the company reported its numbers. The year-on-year numbers are not available and hence not comparable. So we will look at the results on a sequential basis. When we look at the net interest income, it actually stood at almost 270 odd crores. This is an uptick of almost 45% sequentially. PBOC came in, however, lower at almost 40%, and that is mainly on account of dividend income that was present in Q2. Apart from that, net profit also saw a downtick of almost 56%, mainly on the back of higher operating expenses. This time around, the company in its presentation revealed the holding company structure with stake in each of the companies. As far as the products are concerned, they highlighted that they will be launching devices on lease. They've announced launch of supply chain financing. Apart from that, 3 more insurance companies have been added to the list for insurance broking. Debit card, the soft launch has started. They've implemented dynamic QR across the ecosystem. They've also launched an app for merchants and they've enabled Jio Bharat phones with UPI. They also held a con call yesterday. Here are some important takeaways. They have highlighted that they remain cautious on recent market developments in unsecured segment. They've successfully completed testing of consumer durables and personal loans in Q3 FY24. They also have loan against shares and loan against property in the pipeline. So all in all, this is the number. Those were the numbers for Geo Financial Services and the key highlights. So watch out for this counter on the back of its numbers.
Absolutely, Vamakshi. So we'll definitely be keeping an eye on Geo Financial, but there's a couple of initiation notes as well. You've got Axis Capital that has initiated coverage on Bharti Airtel with a buy stance, and UBS as well doing the same with Paytm. So help us with the highlights of those notes as well.
Well, yes, Bharti and Airtel in focus. We have a note coming in from Axis Cap, and they have highlighted that organic ARPU uplift from subscriber premiumization is possible. Upside from 5G in mobile and broadband segments is also very likely. Stable competitive environment in turn supports the hikes that they've taken, and in fact, Bharti's execution share gains. Apart from that, revenue share for even when we look at Vodafone Idea, the losses in fact over there are expected to accelerate as 5G gains traction. So all in all, on the back of those positive factors, we have Axis Cap initiating its coverage on Bharti Airtel with a buy rating. Target price of 1,303 is what they've given. Apart from that, Paytm is another counter that we will be watching out for on the back of a brokerage note that has come through from UBS. They have highlighted that continued monetization and EBITDA break even in turn could drive re-rating for this counter. Keep in mind that Paytm is a payment leader with strength across merchants and customers. EBITDA margin is also expected to gradually reach nearly 20%, and as far as valuations are concerned, the stock is in fact trading at a discount in comparison to some of its global and Indian peers. So all in all, UBS has initiated coverage on Paytm with a buy rating, target price of 900 rupees per share, and on the back of that, watch out for both of these counters, Bharti Airtel and Paytm.
So much, Ramakshi. Bharti Airtel and Paytm will of course be on our radars today, but one other space that we'll be shifting focus to is the primary markets today, because Jyoti CNC is all set to hit the bourses today and make its debut. So let's go across to my colleague Lisa, who has all of those details and what the debut could look like. Lisa.
Right, so Jyoti CNC will be listing today, and analysts are expecting that it will be at a premium of around 13 to 14%. Talking about the IPO bit, the price band is at around 315 to 333 per share. The issue size is at 1,000 crore, and it is a fully fresh issue for around 3 crore shares. There is no component of offer for sale. Talking about the company a bit, it was incorporated in January 1991, and it's a leading manufacturer of metal cutting, computer numerical control CNC machines, and they also export to countries like Romania, Poland, France. They have a capacity to manufacture around 4,400 machines per annum, and the clientele also includes marquee clients like Rolex Rings, Bharat Forge, ISRO, and the objects of the issue that partly they'll be utilizing it to pay off their debt and also for funding their working capital. Major portion of their revenue comes from aerospace and auto, but they will be delving more into the EMS, which is a high margin segment. So that was on Jyoti CNC, which will be listing today. So to keep an eye on that.
Absolutely. So we'll definitely be keeping an eye on Jyoti CNC. But let's also take a look at internet trends in the month of December. And there's for e-commerce Android apps, there's been some growth. There's been a dip in daily average user trend for travel apps as well. Vinny's standing by with an update of all of that data.
Good morning, and absolutely talking about those trends that we have seen on internet usage, what apps is everyone using. So yes, in the month of December seems like overall the traffic index that is there, and this is a note by the Cities research team, and yes, Cities research is highlighting that traffic index for them has seen an increase in terms of the app users by 18% on a year-on-year basis. Online penetration, obviously that's seen a bit of an uptick there as well. And what especially that was a bit of a worry that we've always seen coming in was in terms of the IT hiring trends. That is now, the downturn that we've seen coming in terms of IT hiring, that seems like, maybe that's something that is bottoming out now in the first half, and recovery will come in, but at a slower pace. Let's look at some of the apps, and this is in terms of Android apps in the month of December. For e-commerce, what did well, and what you can see is everyone went shopping on Meesho app, 47% uptick there. Nykaa Fashion also 32% uptick. So, Nykaa Fashion is a smaller compared to other players as well in terms of the fashion business. So, obviously a larger growth is what we're seeing there, but Meesho, Nykaa Fashions and Nykaa, all of them leading the charts, while in terms of Ajio, actually has seen a decline in terms of the traction and app use over there as well. Other than that, for food delivery, Zomato managed to hold on to good gains of around 14%. And FYI, when just for information, when you keep an eye out, Zomato's Android traffic actually remained flattish on a quarter-on-quarter basis. This number, what you're seeing of 14%, that's a year-on-year basis number. Other than that, looking at grocery deliveries also, Blinkit, it has been a smaller portion, a relatively newer app, so that's why 109% uptick. And last 3-4 months, when you look at it, it's been around, the growth has been above the 95%, 94-95% mark as well. So yes, keeping an eye out on Blinkit, Big Basket seeing a decline, as well as JioMart seeing a decline as well. Travel and leisure, very, very tepid trends is what we're seeing. Look at Yatra, Go, Ibibo and ClearTrip. All of them have seen a decline in terms of the usage that has come in as well. So yes, a decline there, while Make My Trip is the only one which has managed to go up on a year-on-year basis of 25%. Other than that, real estate trends, No Broker leading the charts over there in terms of the usage, and this we are talking about the website usage of No Broker. So yes, on the website, daily average users for No Broker, Magic Bricks as well as 99 Acres has seen an increase on a year-on-year basis, while in terms of the website usage for travel trends, IRCTC, Ease My Trip, Make My Trip, all of them have seen a decline. So clearly, travel trends seems like it's not something exciting that we've seen in this month of December as well, and has seen a decline.
Well, Vinny, thanks so much for taking us through a roundup of such interesting data. But with that, I'm afraid we're completely timed out on this edition of Market Cafe. Thanks so much for watching. But while we bid you goodbye, you stay tuned to the channel, because the market takes all the action ahead.